Hi everyone, welcome back to my channel. So in this episode, I want to deep dive into the accrual scheme design. So previously, we had a video talking about the accrual scheme functionality, how should you set up and manage step-by-step transactions. But in this one, I'm actually wanting to share a specific implementation scenario, mainly on how to manage existing prepaid contracts moving from legacy system to Dynamics. So let me explain. The accrual scheme we talked about previously is for new contract. You just create a accrual scheme for the new contract in Dynamics and then run from there. But the scenario I'm going to talk about here is from my current existing system or legacy system, I do have prepaid contracts ongoing. So let's say I have prepaid subscription from last year, and I have booked the prepaid and the cash and running the monthly reclass to the actual expense account. But at some point now, we are going to go live in Dynamics, but that contract will remain intact. So we will need to manage the remaining periods in Dynamics. So how should we book the accrual scheme across two systems? So I have prepared this Excel sheet to quickly give a real life example so you understand. And then I'm going to list all the options and walk you through each one with the pros and cons. So from business scenario side, what I'm talking about is this ongoing prepaid accrual migration. So basically, let's say we have this initial booking, right? This is in the legacy system for that ongoing contract. So the actual contract start date is 12/1/2024. So in the current system, we booked the prepaid subscription versus AP and then AP versus cash. This is from legacy. And then on monthly basis, the current system does not support any accrual scheme. So the accounting team, they basically manually book on monthly basis an entry from prepaid reclass to subscription fee expense account. So for this entry, it happens every month until 10/31/2025. So let's assume our go live date is 11/1/2025. So that means I have 12 months contract. Now I have consumed until October. So there is two remaining period left for this prepaid contract, meaning that those two remaining periods will need to be managed and continue to be booked in Dynamics. So let's have an overview. My ending balance as of 10/31/2025. So let's say this is the closing balance from my legacy. So in that case, I have my prepaid subscription, 12,000 versus cash. This is the total contract amount. And for now, since I have consumed the 10 periods, so now I have 10,000, right? So remaining entries are listed here. So I have 2,000 remaining balance to be cleared out for the other 2 months for November and December. So these entries will need to be managed in Dynamics. So now let's talk about options. How should you set up in Dynamics to manage those remaining entries? Now moving on here, so I have break that down per monthly transaction. So that's on November and December. The first option, also most straightforward, is actually since this is a straight reclass from prepaid to expense, we don't need to actually create accrual scheme in Dynamics again for those two remaining periods and then have the system auto calculate. It's just actual work, right, to maintain that accrual scheme in Dynamics. So that's why we suggest option one. You basically maintain this existing schedule either on Excel or from legacy. So you have this list, okay, I have two periods to be paid. And when you get to November period, you get to Dynamics and do a periodic journal through that journal template. So you can recall that journal template, having this 1,000 booked with the November date and post, right? And when you come to December, you do the same exercise using the periodic journal. So the benefit of this is you still have the flexibility to maintain your remaining accrual periods in case any amount changes and adjustments happening. You have that journal not being posted in the future period, so you can adjust. And also, it's not impacting your future accounting periods if the accounting team feels more comfortable in this way, right? So this is option one. Option two, Before we get to option two, actually the downside of option one is you have to maintain this accrual scheme either on Excel or out of Dynamics. So that's extra maintenance work. And you have to remember, okay, we get into November and I need to browse through all my pending accrual contracts depending on the volume. Okay, maybe for this contract, I need to book one entry. And on the other contract, there's no longer entry for November. That's fine. I need to skip that. So there is a manual analysis work or maintenance work, then you have to decide which one to be booked in Dynamics, right? So that's option one. Option two, similar to option one, but the difference is instead of posting month by month and maintaining a schedule out of Dynamics, you just put everything in a journal and we post that at the point of go live. So consider this as a data migration type of activities. So we identify, okay, here are all your remaining contracts we need to migrate into Dynamics. And here are your list of entries. So the data migration team will create a journal entry for each period and load those entries and post directly. So that means at the point of go live, all your remaining contracts are closed from legacy and they are fully booked in Dynamics as well for all future periods. So you don't need to manually maintain the schedule and do the manual booking. But the downside is, again, you don't have flexibility. Those entries are booked, meaning posted. There's no way to get it back to make changes. So you can still reverse it, but just know that it's hitting the future accounting periods and existing on your book, right? So that's option two. The last option, in case we want to have absolute control by Dynamics, I don't want to maintain any remaining entries. I just want the system to capture the accrual scheme rules and then automatically generate journal entries for me. You can consider option three, which is create additional accrual scheme for the remaining periods and then book your prepaid entries and have the system to automatically reverse that or reclass that on monthly basis for all remaining periods. So that's another way. I mean, technically it's feasible, but that's also extra work. Downside is you have to maintain those additional accrual scheme schedules and manually book entries and pay attention that you don't double book because your prepaid account has been impacted from legacy already. But the benefit of this approach is you have everything automated. So you don't need to manually maintain schedule. You don't need to post it to future periods manually. But as long as you use accrual scheme, the posting will be in the future periods, right? So on that point, it doesn't change. So typically, I would recommend choosing between option one or option two, depending on the level of comfort. But mostly, the client prefers option two, which just considers this activity as part of the data migration. Now, I want to do a double click on option three. So in case you go with this option, as I mentioned previously, you need to pay attention. There's no double booking. So potentially, I can show you how you can create your accrual scheme and book your entries to avoid creating additional reversal journal to ensure the prepaid account is not double booked from legacy and from Dynamics. So I'm going to open up Dynamics to show you. First, let's check the accrual scheme. So under General Ledger, I'll open up. So remember this accrual scheme needs to be based on the remaining periods, not the whole periods. So actually I'm creating this as a sample subscription 12 months, but you should not put 12 months. Here should only be 2 periods remaining, right? But let's just consider, okay, we have 12 months pending now. So this is your accrual scheme. You put the prepaid accounts in both debit and credit side. Select the voucher for new voucher for all the new transactions, giving the number sequence code, and say now we want to generate evenly on monthly basis and post the entry at month end. So pretty straightforward settings. Just need to make sure the number of occurrence by period, they should be matching your remaining periods. Okay. With that, I can start booking my GL, right? So when I open up, I have a sample already created. So I'm going to find from posted entries, show only by me. Okay, so with this entry, let's see. What I booked here on the left-hand side, that's going to be your cost account or expense account. And then we book that total 12,000 on debit side. But again, this shouldn't be your total contract. This should be the 2,000 actually in our sample with the 2 remaining periods. And then the offset is going to be your prepaid GL account. So this matches your accrual scheme account. So with that, what is going to happen is from a accrual scheme perspective, the system is going to generate a reclass entry from prepaid versus actual expense accounts for the remaining 2 periods. That part is good. But now you may say, but how can I handle this initial entry 6 versus 1? Because this entry is already booked from my legacy. How can I reverse it? Now let me show you. You actually do not need to reverse this because even though you enter this way, from posting side, it's going to be different. So let me show you. First, you do voucher. So you can see from this voucher, given that the offset account is the prepaid account, and that matches our accrual scheme setting, and it's actually doing an in and out entry on the same prepaid account. So basically, this is an in and out. It doesn't really create any impact on the 6 account. So you don't need to reverse anything, even though from the entering perspective, you do select the 6, but from posting side, it's just an in and out without any impact or movement. And then from there, if you want to see the future remaining 2 periods entry, you can go to audit trial, voucher transactions. Since in my case, I have the 12 periods as a rule, but typically if you put the remaining periods as 2, you will only see those entries. So let's take an example for the last period, 930. So it's actually moving from your prepaid and debiting the expense account 6. So we can see the 6 account is debit and the prepaid insurance is a credit. So the system is creating this for all the remaining periods. At the same time, your original entry creates an in and out, so you don't have any accounting impact. If you book the same approach as what I showed you, you can avoid a reversal entry or avoid double booking, but still using the accrual scheme to handle the remaining periods. All right, so that's all I want to share in this video. I hope this is helpful, give you some other options so you can discuss with the client how should we manage ongoing prepaid accrual contracts. All right, thank you so much for watching. I'll see you in the next one.